Coming to you from sunny Orlando, Florida, welcome to the Paperstac podcast, where we cover current topics in the note industry, give you tactics for your note business, and talk with industry leaders to make you a better note investor. And now, your hosts, Brett Burky and Rick Allen.
Hey, welcome back to the Paperstac podcast. Rick Allen, Brett Burky here for another edition. Super excited what we've got lined up today, something that I get to play the dummy, sort of, so to speak. And I don't, I'm learning about some of this stuff for the very first time. Brett knows a little bit about it, but I'm so excited. Tell me, who do we have today and what is it?
Tanisha Souza from Tardus Wealth. So we want to introduce you and kind of talk about what is the Income Snowball by Tardus and how to use it, and kind of go over the ways that you can use it with investing in debt. And so welcome to the show.
Oh, thank you. I'm excited to be here. Thanks for having me.
Yeah. So
tell us a little bit about yourself. What's your background? How'd you get into the Income Snowball? And then you can tell us a little bit, what is the Income Snowball? Because people, I'm sure, are like, what is this? I'm interested.
Mm-hmm. Yeah. So actually, my background is I'm a lawyer. I used to practice law in California and in Hawaii. Mm-hmm. And I realized that was something I hated doing. So I needed to find a way out. But I had about $100,000 in student loan debt, and my husband said, you can't quit until we pay off your student loans. So I was like, yeah, you're right. We need to do this. So we were looking for passive income to enable us to quit working, because I think a lot of people don't realize that all you need to do is to create enough monthly passive income from your investments to cover all of your living expenses, and then you're done. You don't have to work anymore. I think the vast majority of the population is trying to accumulate this large amount in, retirement account or 401k or something like that. And then they're hoping to live off the interest, which, if you can't predict what the stock market's going to do, that's going to be, very difficult. We, in fact, had some people come to us after 9/11? It was after one big major stock market crash, who were retired with their money from their 401k and ended up having to go back to work after that because their stock portfolio went down to half. So anyway, you just, those are those unpredictable things. But if you have monthly income that's predictable, it's recurring, and you can, build on that, then you're done. So we did that. We did that in about 2.5 years.
Wow.
First, we paid off my student loans. We did it through real estate, so we're really into real estate and real estate type investments, and paid off the student loans by flipping a house. And then later, within 2 years, we purchased a strip mall.
Oh wow!
After buying several different properties, and that strip mall the income from that was more than enough that neither of us actually had to work anymore. But I was the one that wanted to quit my job, so but I didn't know what else to do, so I kept doing that for a while, right? If that's what you've been doing, that's what you're trained to do, until an opportunity came up to actually start a business, and then we started our company at that point. So we had heard about a franchise opportunity. We went ahead, and I said, hey, I'll quit my job, I'll do it. All you can do it for free, you don't have to pay me, right? And that's what's great. If you have enough passive income, you can follow your dreams and do something that's risky. Mm-hmm. Like starting a business when you don't know what you're doing, because you have enough passive income to cover all of your expenses, right? So, so we went ahead and did that. I was, for about 8 months, I didn't get paid. I didn't take a salary or anything. And then we became profitable in the first 8 months. Basically, it was a mortgage acceleration company. So we were teaching people how to pay off their mortgages early. After about a couple of years of doing that, my husband and I were still investing, and I thought, wow, it would be so great to teach people how to do what we're doing, like to help them get financially free. Because paying off your mortgage is not going to get you financially free. It's just not. Like, you'll have no debt, but you still have bills to pay. So unless you can cover that with passive income, you're still working.
Right.
So we wanted to teach people what we did. So we wanted to start incorporating other things into this franchise. The franchisor didn't want us to do that. So we went ahead and bought them out, and then we changed it to a full-scale wealth coaching business. So that's what we've been doing for over 20 years now, total.
Wow.
So that was how the how we got the company. We changed the name slightly. It was like Tardus, and then Tardus Financial Services, and then we changed it to Tardus Wealth Strategies, because it's about building wealth, not paying off debt. And we ended up, I think this is kind of the interesting thing, because we were financially free and we were running this business. I came up with the idea of the income snowball, and this was probably around 2009 or 8. And we went ahead and I filed a patent on it. I came up with this idea, wrote it down on a napkin, was showing my husband, and he was like, "What are you talking about?" I actually went to a couple of people in the financial industry and said, "Hey, I have this idea about stacking investments that provide predictable monthly income, sort of like notes, right?" Mm-hmm. And they looked at me like I was nuts. And I thought, well, these guys are the experts. They know I don't know what I'm doing. I'm just a lawyer. So I kind of let it go. And it wasn't until years later, my mother told me about Prosper.
Oh,
and she said, there's a company that offers these notes, not mortgage notes, not backed by anything, right? They're unsecured. Mm-hmm. And I said, you know what, this will work. So we started with that, went ahead with Living Club, and then expanded out into different types of investments that work the same way, just like mortgage notes. And so that's how the whole thing was started. We got the patent in 2014. It's very successful. We helped thousands of people over the years. Yeah. So it's been fun.
How long did that patent process take? Did it take a long time?
Took about 5 or 6 years.
Wow. Yeah. I figured that didn't take about that long.
Yeah.
That's cool. So that's the origin of everything, how it got started. And what exactly is the Income Snowball? You explained it a little bit. I know you guys have software that goes through and shows you how to do it, and there's a whole system to it, but maybe like the Cliff Notes versions of what exactly it is, so our listeners understand.
Yeah, absolutely. So the Income Snowball is a system for building wealth. And you can also use it to pay off debt. If that's what you really want to do, you can do it simultaneously, right? Where most investing strategies, you either have to, pay off your debt first and then try to build wealth, or, you leave the debt alone and you pay off, and you create wealth. You can do both if you want. But the way it works is, you start off with a little bit of leverage, and usually we do that through lines of credit. And what you want to do is you don't want to use a line of credit that's too big. Mm-hmm. And so I'll kind of explain how that works in a second. But what we're doing is using small amounts of leverage, lines of credit that can be paid off and reused. And you're purchasing short-term amortized investments to start. So we have something that we call fast-burning fuel, and we have slow-burning fuel. So the fast-burning fuel are short-term amortized investments that pay monthly income for like 5 years, 3 years, 2 years, that sort of thing. Later, the slow-burning fuel are those investments that pay you predictable monthly income for 20 years, 30 years, that sort of thing. Right? Yeah. So you can kind of see already how notes fit into this, right?
Yeah.
Because you get predictable monthly income from mortgage notes. You can get them in short term or long term, right? So they can fit in both. Mm-hmm. So, and that's why I got so excited about it when I first started to invest in notes myself, right? Mm-hmm. That's not how we got financially free, but I'm always looking for new investments that will work with the snowball. So, let's say 10 run, we'll use that from the bank's money, other people's money, buy the investment. Now we've got principal and interest coming in for however many years, say for a 5-year period. Typically, so it's going to be a lot more principal, but you're getting larger payments than you would if you were to invest in, say, like some like a REIT or something, where you're getting interest only payments, or another type of stock market type investment where you're going to get paid monthly interest if the payments are not big enough. So those large payments, what they do is you combine that with your cash flow, and it helps to pay off that line of credit in a few months. Okay, so usually it's somewhere between 3 and 7 months. And the calculator will tell you the size of line of credit to get. If you put in the investment and what the return is, it'll tell you how long it will take you and how many of those you should buy. And then it will tell you when to increase the line of credit, because you do need to increase it over time. And so that's unlike using your own cash, right? Because you're not necessarily going to have more cash in the future to just keep expanding the amount that you invest. But if you use a line of credit, you can. And so we show you how to do that. We help you, get your lines, all that stuff. But what you're doing is you're stacking that income. So you're going to get that income for 5 years. Right. But you're going to pay off that line of credit, say in 6, and you're going to buy another note. Let's say you buy a second set of short-term notes. Mm-hmm. Now you've stacked it. So maybe you're getting, say, $300 a month. Now you're going to get $600 a month after 6, and that's going to continue for almost 5 years. Mm-hmm. And then you're going to do it again. But every time you do a new investment, it stacks on top of the last one. Mm-hmm. So you're getting $300 a month for 5 years. Then now you're getting $600 a month 6 months into it. And then the next time you're getting $900 a month, but instead of taking 6 months, it only takes you 5 or 4 to do the next investment because you have 3 times as much money. Does that make sense, Rick?
Yeah, so I see what you're saying. So basically, every time you layer on another level of investment, it allows you to pay off that credit line quicker. So
faster.
Faster. So the first time it may take you 7 to 12 or 13 months, and then you've got it for the duration of the 5 years. And then the next one you buy it, well, now you've got double the income. Double the cash flow coming in. It allows you to pay it off that much quicker. So that way you can just keep layering and stacking them right on top of each other. And then as you have more monthly income coming in, you bump up your credit line because you've got more cash flow, allows you to pay it off quicker. And then eventually you've got quite a bit of cash flow coming in and you potentially have nothing. Or if you just keep it going, I guess is the way to work it, right?
Yeah, so there's 2 ways, right? You just keep it going with that, just stacking that way with the short term, or what you do is you start using the short term to buy long term. Mm-hmm. So let me show you how people have been doing with real estate. What they've been doing is using different types of short term amortized investments for the slow burning, and then they're like, you know what? I want to buy a rental property, but I don't have enough cash to do it. What happens is the line of credit gets big enough where you can actually use part of that line of credit as the down payment on the rental, and then the rest of it goes into slow burning fuel. So our calculator will tell you the split. So it might be 60-40, 70-30 split. It will tell you, you're using a $50,000 line of credit, $30,000 goes to the down payment, $20,000 goes into fast burning fuel, and then it just keeps going, and it calculates everything, how much money you'll have from both, right? You're going to get a lot less cash flow from the rental than you are from this short-term investment, but it could potentially last forever, or at least a long time. Same thing with mortgage notes, right? Mm-hmm. So now what's happening is that all that fast money that you have, that's huge. Maybe you've got 15, 20 grand a month coming in from the slow burning fuel, from the fast burning fuel. Now you use that, right? The line of credit, really, but you're using all that cash to pay it off quicker. Now you're buying, big, huge, long-term notes over and over and over again. Mm-hmm. And you can actually do that until you completely run out of short-term notes. And now you're done. You don't have to do any more, we call it flipping, where you're flipping your line of credit and paying it off and buying new notes. But that's kind of an end-game strategy. So there's so many ways to do this. It's insane. You can do a 3-way split. You can buy mortgage notes and real estate and at the same time. It's really fun. It's exciting all the possibilities you can do. And not only will the coaches help you by running all these projections for you and showing you what's possible, but it just makes you a lot more competitive investor when you already have a plan for what to do. You know what to look for. You have your criteria all laid out for whether it's mortgage notes or whether it's real estate. It doesn't matter what it is. You've got a written game plan for exactly what to do, so you can just boom, pull the trigger, buy the thing because you know what you're looking for.
Perfect. And so
does that make sense?
Yeah, your software then helps with kind of everything. It's kind of a front to back. Is it like an A to Z, cradle to grave type of thing from the time you were like analyzing your first deal to you're putting it in there and sort of tracking how it goes? And does it tell you when I need to up my credit line and all that stuff?
Exactly. Wow. Tells you when to up your credit line and by how much.
Oh, so it's almost dummy proof, right? It's like foolproof. You just have to follow the plan.
That's correct.
That's cool.
That's correct. Not everyone does, but most people do. So
That's really cool.
So the vast majority are very successful because they know how to follow a plan. Yeah.
So where is okay? So I guess it sounds like step one is reach out to you to kind of get. Is there education that goes along with this, or is there an onboarding process, or how does that work?
That's a good question. So, the first thing is what we like to do is suppose somebody says, okay, I want to see if this will work for me. What they'll do is they'll ask for a free strategy session, and a wealth coach will get with them, find out what are your goals, what are you trying to do. Well, I'd like to retire. I need 10 grand a month. I need 6 grand a month, cover my bills, whatever it is. They'll plug all that in, their current income, cash flow, and all of that, any future changes they know about. And what they'll do is they'll say, okay, this is what the plan is. This is what we have. This is how long it's going to take you. Would you like to work with us or not? Then the client says, okay, yeah, I'd like to do this. Then they're going to help you set everything up. There's education even before you do that. Actually, we have 2 videos. My mini course, I have a mini course that's free, and the Income Snowball video that's also free. And we do that because you need to understand this concept and how it works before you enroll with us. We want people to understand how it works before they sign up.
Interesting.
Once they sign up, they have a coach that works with them one-on-one. So that they have the first wealth coach, and then they have somebody who's also a financial coach. We call them the success coach. That person meets with them every month, make sure that they're on track. If anything changes in their financial situation, we know what to do, right? There's always going to be a plan A, plan B, plan C. If your investment doesn't perform as expected, you need to have a plan for that. We show what to do for that. They have all of this written out before they start. It's easy. Tell me proof, as you say.
Yeah. Does your so when it's time to start lining up lines of credit, is that something that you guys help with, or is it kind of like go to your bank and get a personal line of credit, or what does that step look like?
We help with that. So what we do is we gather some information from whoever's looking at this ahead of time, not just the financial information, but also the information that would help us determine what type of line of credit they're likely to be able to get. And then we do have some resources that we can send them to. We help them with that application process, everything. Some people already have one, which is great. The mistake we don't want people to make, because this is kind of a big one if they do, let's say they already have a line of credit. Like in Hawaii, we see most people have, homes are expensive, right? So people own like an $800,000, $1 million home, and maybe they have, $400,000 worth of equity. They're like, ooh, I can $100,000 equity line of 250. I'll just throw that whole thing in. Bad idea. It will take too long. You know how you were saying earlier, Rick, and I was gonna interject, but you were saying, suppose the first time it takes you a year and a half, whatever, to pay off that line of credit. That's actually a little bit too long.
Okay.
If it takes you too long to pay it off, your income's not going to stack appropriately. So you need to have it needs to be short enough that you're able to stack it. Calculator shows you to do it, like in order to get the income that you're expecting by the end. So they just have to follow the plan, and they're going to be paying it off usually in a lot less than a year.
So it sounds like to me then there's a couple different like factors that come into play here. Like one is like what's the interest rate or something on the investment you bought? Like what are you making there? But also what's your excess cash flow to where you can pay it off and then start kind of letting those two hold hands to get it done in a timely manner. Yeah. That's good. That means cool. It's always good because I know some people are like, well, more is better, and it's not. It sounds like this. If you want it to stack properly, less is actually more. Just follow the plan. It's just a recipe, really. Let the software do the work.
That's right. Yeah.
So you only have one line of credit though? There's not like you were saying that you go back. I didn't know that you can up your line of credit. Because I thought there was like a draw period a lot of times with lines of credit, right? Am I incorrect there?
Depends on the type of line of credit, and that's another thing, right? So we want to make sure that they get the right type of line of credit. Typically, there's a lot of different ones that will work, but then there's some that just won't work very well with the system. So we're talking using one line of credit and just increasing that line of credit over time. And you can switch it out. You can also use cash value life insurance. So we have clients that are using that as well. You just have to use that appropriately as well. Some people, the way their insurance is set up won't let them do it in the timely manner that they would need to in order to make this work, but most of the people that we've seen do. So we take a look at all, right, and say, okay, this will work. This is what you're gonna have to do. You're gonna have to contact your insurance company, get this, and that. But the interest rates on the investment matter more than the interest rate on the line of credit.
That makes sense.
So if you can get one or two more points interest on your investment, usually you're going to see an acceleration of your financial freedom date by about a year or two.
Right.
And we're talking, here's what's crazy. My clients, the typical, are able to reach financial freedom in 5 to 10 years, generally.
That's awesome. Mm-hmm. Wow. That's fantastic.
Yeah. And so, the traditional system, right, which you guys are familiar with, 401ks and all that, like it takes I don't know, like if they can ever do it, it'll usually take them 30, 40, 50 years, right? Mm-hmm. To accumulate millions of dollars and try to live off the interest. We're talking a fraction of the time. So we know all the little tricks that you can do to speed that up, to make it, if your financial freedom date is 12, with our system, we show you that. Mm-hmm. We can show you some tricks to get it down to 9, right? Or 10, and on and on. So, we've had a client do it in 2, which is about the same time that it took Chris and I to do it, with real estate. So
that's awesome.
Yeah.
That's really neat. Mm-hmm. Yeah, to actually know that you could actually be completely free in 5 to 10 years. I'm interested. Yeah, that sounds really cool. And is it only
a full-time note investor, right?
Yeah, there you go. And then is it usually only the investments are for real estate based assets, or is there people doing crypto, or is it people doing notes, and is it all over the board? Or?
Yeah. So for short term, there's about, I don't know, I think people were thinking about 4 or 5 different types of investments right now. So they have their choice, and we usually tell them, hey, if you find something that works, we show them the criteria to look for short-term fast-burning fuel, so they can go out and find their own. So we had a client, for example, that found motorcycle notes. Yeah. On Yield Street, 3-year notes, and the interest rate was great. It was perfect. Principal and interest, exactly what we're looking for. I said, that will work. Go ahead and do it, So, there's all different types, but there's a company out in Idaho that created a product for the Income Snowball. It's a financial planning firm, and it's income producing principal and interest. It's done very well for our clients over the years. What is it called? Peer-to-peer lending, that works. Mortgage notes work. There's a crypto works if you're, depending on, you have to do it right. This is not a Bitcoin type of thing. We're not talking about that. You have to get predictable income. You have to be able to take principal and interest out, and you have to keep your costs low. So we show you how to do that if that's something you're interested in. But all of those things are, really take you outside of the traditional stock market type of system. So when you're seeing all this volatility out there, you don't have to worry about it because you're outside of that whole thing.
So the things so it seems like some of these investments can be rather passive, like a Yield Street or like a Peer Street, things like that. You're basically putting your money to work, and they're doing all the work. So that's some of these options can be passive.
That's right. So nice. But those are short term. So those work for the fast burning fuel, right?
Right.
So if you want to eventually make it so you don't have to ever invest again, and you're just living on the income, and you're not recycling everything, then you can basically swap out your short term for long term. And so that's one of the end game scenarios that we can run for you, so you can see if that's something you want to do. A lot of people just go, no, I just want to keep growing this thing. I can live on this. Live on a portion of it and just keep growing it. So they just want to keep doing that. That's always a possibility.
So what are the, it sounds good, it sounds great. What's the risk? What are the downfalls? What's the icky that people are not thinking about? The stuff you're like, wish I would have known that at the beginning.
Mm-hmm. Yeah, so there's already investment, right? So we don't care what investment you use.
Right.
But what we do is we help the client up front we help them have a decision process for every investment they make. So we actually help them lay out, okay, what am I looking for exactly? So let's say that they're going to be buying mortgage notes. Mm-hmm. We say, okay, for short burning fuel, this is what's going to work for your Snowball based on your cash flow, your parameters, what you're trying to do. So now these are the types of notes you need to look for. Then they're going to look for those.
Okay.
They may also be looking at certain vicinities, like areas, right? Because they want to be able to take the home back and resell it if the note doesn't work out, for example. Mm-hmm. So those are other parameters we have to make sure they work out. Then we have this whole section of, what am I going to do if my investment doesn't perform as expected? So if their investment doesn't perform as expected, first of all, what does that mean? If it's real estate, for example, it might be, I have too many repairs, so many repairs on this property that it wipes out my cash flow. If the repairs are over 20 grand or 10 grand or something like that, I'm going to exchange it for another property, or I'm going to get a new property manager, or I'm going to do X, Y, Z. And all that's decided before anything goes wrong. So you already have a plan B and a plan C.
Perfect.
So we have them do that for every investment they make up front. That's the coaching aspect of this, right? So they don't just go out there and do something that they've seen, watched in one of our videos. They actually have a specific plan for themselves that also entails what they're going to do. There's no emotion in it. Right. There's no more emotion. It's all logic. It's like, these things happen. Therefore, boom, here's my plan B going in action down. So it's that sort of thing. So again, there's risk in any investment, but I believe the income snowball reduces the risk of all of the investments you make because of the coaching and also how the software just kind of lays out for you.
I think it's huge. Most people, whenever they're getting into a new investment or starting something, that's the biggest thing. They're like, I'm taking this leap of faith, but knowing then that you're like, hey, no, you have somebody that's going alongside with you that can kind of not only, answer questions up front, but really help lay out your plan. I think that's a big, kind of that golden parachute that people look for in an investment that gives them something and gives them confidence to go out and do something like this.
Yeah, having a coach, that's kind of cool. Can you contact the coach at any time? Is there like just dial, or is it like once a month you're allowed to have 30 minutes, or is it like open-ended, calm?
Yeah, so there's a couple things, right? So there's a lot. We have so many resources. So we've got education library. We have weekly coaching calls with a bunch of coaches. So our coaches do weekly calls, but like group coaching calls. So if they ever want to jump on, listen to what other people's questions are. I have this issue. I don't know how to do this. They can always get on those that are live, right? Jump on one of those during the week with any coach. Then you have your coach once a month that you meet with for 30 minutes. You complete a pre-meeting form with all your questions. You answer whether or not you did what you're supposed to do, all that stuff. You send it in. The coach meets with you. It's very efficient. Right, you've got an agenda, boom, 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 boom. Now you've got your next thing that you're going to do before the next meeting. So you always know what's ahead, what's coming up. You have a plan for the year.
I like that.
It's all laid out. If you have a question in between, you can send it. But typically, you're going to write all of that down in a pre-meeting form before the next meeting, so you can get it answered live. If you want them to run a new scenario on the calculator for you, they can do that, or kind of make some suggestions for you. But typically, it's going to be in those meetings that's going to be the most powerful piece of the one-on-ones. Yeah.
And is this software something you can download and you have, like if a user has it, they have access to it at any one time, or is that something that you guys use and show them?
It's something we use right now, but process of creating a mobile app with the calculator in it so that clients can run their own what-if scenarios. Okay, cool. So we believe that's probably going to go live in October this year. We thought it was going to be mid-year, like August, but it's getting pushed back. We're doing a lot of CRM changes and stuff, and that has to happen before we can do that. So probably about October is when clients will have access to it.
That's super cool. Huh.
Yeah.
And then every one of the coaches, I guess, are successful stories themselves. They've gone through the system and done everything.
Yeah, I mean, you'll see YouTube channel. We have a coach. Well, she actually retired last year, but her name is Kathy Cargilla, and she was phenomenal. I mean, she's somebody that had an IRA. This is a crazy story. She had an IRA. She invested, did the dollar cost averaging for 30 years. So she started when she was 37, I believe. 67, she looks at her account, she has $105,000. So she invested for 30 years and she ended up with $130,000. She could retire on that.
Yeah.
So she came to us, and I believe it was in 2 years or 3 years, she was completely debt-free, mortgage-free, and financially free. And she actually, so she came to work for us for a bit. She was like, I want to help people do this. It's amazing. And then she just totally retired.
That's cool.
So,
Wow.
Yeah.
Imagine the realization that for 30 years and then she did what she wanted to do in 2 years with you guys. That's pretty cool. That's pretty interesting.
Yeah, it's crazy.
This is good.
Yeah, it was really good.
Yeah, I mean, I think I got all the questions I had answered.
So, how can people get in touch with you?
They can go to the link. Hopefully,
we'll have a link in that. Yeah.
Provided you guys with. All they have to do is click on that link, and it'll take them straight to a strategy session. They can talk to a coach, and they'll lay out a plan and let you know this will work for you. This won't work for you. It'll take you 15 years. It'll take you 3 years. Whatever, and they can decide. And then after that, they're going to send you my mini course for free. They'll send you my income snowball video for free for you to take a look at before you meet with the coach. And it'll be good. That's all I have to do.
Perfect.
Super easy, no commitment. Just get in there, check it out, see if you like it. Everybody wants to be financial free. It just reminds me of I don't know if you ever read the 4-Hour Work Week by Tim Ferriss. But it kind of it talks about having these, being financially free at an earlier age instead of the rat race and getting to the end and trying to enjoy, financial freedom. If you can never get there with the last 10 or 15 years of your life, right? It just it's going to resonate with a lot of people. So I'm really excited.
Yeah, because I'm sure everyone's read the book Rich Dad Poor Dad, and this is the actual strategy that's actually used at Income Snowball to get out of the rat race, right?
Yeah.
Was he inspirational to you, being that he's also from Hawaii? You guys did a lot of that?
Yeah, it was great. I got to interview him twice.
Oh, really? Wow, that's so cool.
Yeah, on my radio show, I think you can go to my website and download one of the interviews I did with him a long time ago, but he was really awesome. And he was just like, yeah, Tardus is great. I mean, he's a great guy.
That's cool.
He's a great guy. So is his wife.
Yeah, what a stamp of approval there.
Right.
Yeah.
I got his game
Saki giving you the old, hey, yes.
Yeah.
If he approves of it, who shouldn't?
Yeah, I actually have his game board, and it takes so long to play. It's a long game, but it's fun. Just
good with the kids.
I'm trying to. Yeah. So I guess that's it for today. Appreciate you coming on the podcast, and we're gonna be sure to add links to the description below. And that's pretty much it. So thank you for tuning, and see you around. See ya.
All right. Thank you. Thanks for having me, guys.
Yeah.
Bye.
Bye. Perfect.
Cool.
Awesome. Thank you.